Welcome to this special recap featuring our MD, Mr. Sola Adeyiga, hosted by the Winning Edge, where he shares deep insights on building financial resilience across two powerful sessions. Get ready to revisit the highlights, practical tips, and strategies that matter most in today's economy.
This morning, join me to welcome our guest speaker and the CEO of Credit Pro Business Support Services Limited, Mr. Sola Adeyiga. Sola, you have the floor.
All right, fantastic. What happened in these four frames? In one word, please, can somebody type? What happened in one word in these four frames? We've said frame 1 was coronavirus, frame 2 was Russia-Ukraine war. That is still happening. Frame 3, subsidy gone. We know what happened. And frame 4, President Trump increasing tariff for all the countries. What means what happened here? Disruption. Who said it first? Okay, fantastic. Or say yeah. Disruption is the answer. So yes. If it's not part of the three winners, I would like to add a book purposely for this. Yes, if it's not one of the three winners, then it has to be given. Okay, fantastic. So thank you so much. You have made my day. This four frame connote one thing: disruption. Coronavirus, you know what it did. The Ukraine war, you know how it affected us directly or indirectly. Subsidy gone affected us and is affecting us directly. And this man's increasing tariff is creating a lot of pressure on global trade. So all these four situations have affected us either directly or indirectly. And when I said us, it means both household and businesses. So this is the basis of my presentation. How do we manage disruptions? How do businesses manage disruption? Because one thing is clear: disruption will happen, and disruption will still happen. No matter how religious or prayerful we are, there will always be disruption in the world. How do household and businesses position themselves when disruption happens, which we know is certainly going to happen? Thank you. So I go through the presentation now. All right, thank you. Congratulations, my three winners, and thank you for participating, everybody. Let us discuss what business resilience really means. Business resilience is the ability of an organization to anticipate, prepare for, and respond to quickly recover from disruptions while continuing its primary operation. Remember that answer: disruption. The concept extends beyond traditional crisis management or disaster recovery. It's about fostering adaptable, flexible, and robust organization capable of diverse disruption. As I said in my icebreaker, disruption will always happen. How do businesses respond to disruption? Resilience should be ingrained in an organization's culture, strategy, and operational method. What this means is that you must build resilience into your business model. I'm going to be talking more to business owners. I'm sorry, but I believe everyone is either in business or intending to be in business. So you can always learn from this. So, but of course, I'm a small business, campaigner. So I will always speak to business owners. All right. So that is what business resilience is all about. Let's look at different dimensions of resilience. We have, as a business, you should be operationally resilient. Your operation must be tight. Your human resources must be resilient. You must have the right team and you must keep training them. You must be financially resilient, meaning that no matter what, financially you are not in a tight corner. You understand? You must be strong financially, no matter the situation, external situation affecting businesses all over. You must be financially strong and resilient. Strategically, you must be resilient, and digitally, you must be resilient. Bill Gates once said that any business that is not digital is a no business. It's just a matter of time. Disruption will wipe you off. All right, so these are five dimensions of resilience: operational resilience, human resilience, financial resilience, strategic resilience, and digital resilience. And all these resiliences, a business. Please, can you help us meet everybody, admin? Every business must ensure they have resilience in area. So if you are a business owner, and you are deficient in any of this area, please go back to your management team and see how you can fortify. And let me tell you, we are all work in progress. Businesses are not all work in progress. There's always one thing to work on in your business. All right, so what is financial resilience? Remember, I said financial resilience is one of the 5 dimensions of resilience that every business must focus on. So let's talk about financial resilience, which is the reason why we are all here today. The ability of the business to withstand and recover from financial shocks while continuing to operate and grow. Remember COVID-19. Some of us were locked down for 3 months. Many businesses died. Some businesses survived. Why did some businesses survive? Why others died? It's a question we keep asking ourselves, but it's about financial resilience. A resilient business can successfully deal with unexpected challenges and find opportunities during periods of disruption. Look at what happened to Zoom. Despite the disruption, Zoom became actually a market leader in their industry. And these are companies that actually took advantage of disruption. And it's about building resilience into their business model. So as business owners here, you should start preempting the next COVID-19. How do you survive when it happens? That is what we talk about when we are dealing with business and financial resilience. Financial resilience doesn't just mean having a lot of money stashed somewhere, but rather having contingency plan in place for certain scenarios. So let us review 4 pillars of financial resilience. Remember, we started from business resilience, and we said financial resilience is a component of business resilience. Now we want to look at 4 areas where businesses should focus to be financially resilient. Thank you. All right, so if you have any question, put it in the chat box. If you have time, we are going to deal with it at the end of the session. The first area businesses should focus on is financial planning and management. How many of us have budgets for this year? Quarter 2 are just finished. We are just starting quarter 3. Do you have a budget and a forecast for quarter 3? What you don't measure, you cannot manage, you cannot monitor. So everybody should have a budget. It's key for you to be financially sound. You must know what you are working towards in terms of your budgeting. Debt management is very important. Many people, I'm in the business of finance, so I do debt, I manage debt, and I will tell you, people run away from debt, but debt is actually not the problem, but it's the way we apply and use debt that is the problem. So to be a financially resilient business, you must be able to manage debt. You don't take a wrong debt to finance a good cause. It will boomerang. Despite you having a good cause, if you take the wrong debt, for instance, you want to do a property, invest in a property for your business, and somebody is offering you a loan for 6 months or 1 year, and you went for it, then you already set yourself up for danger, because by the time repayment is due, you are not really making so much money from the asset, because the asset is a long term. So in finance balance, we say use you must be able to match your asset and your liability. And this is where many businesses fall trap of debt. So debt on its own is not a problem, but how we apply debt is what we need to look at as businesses. Yeah, reserve is key. Businesses are going concern, right? You can be so profitable this year, and next year disruption happens and you lose all your profit. And you realize that you are running at a loss. At that instance, what do? You go back to your reserve. So while everything is good, it is important that we keep profit reserve. You don't share, or you don't pay dividend, or you don't wipe off all your profit for a year. Ensure you keep, putting money in an investment, in an emergency fund, in one account or the other, from your profit. It will do you a lot of good if you have a reasonable reserve, and so whenever it's raised, you have an umbrella to cover you. All right, so cost management is key, right? There are 2 ways to make money. I say this to my management team every time. It's either you increase your revenue or you reduce your cost. Oftentimes, it's difficult for us to increase revenue, but increasing cost is within our ambient. So let us try to see how we can remove one expense or the other. I was fighting with my financial controller yesterday, and I was saying, hey, how are we paying so much on COT to our banker? And I'm telling you, they have business account that will save you of COT. But many times, businesses are not even, concerned about that. We just want to run our business day-to-day activities, and there are so many loopholes, leakages in your business that you can plug. One of them is paying COT. You can't have that COT. So banks have different products that will help you, that will save you on COT. But if you run normally like the big bank, the big organization that don't really care, then you keep paying so much to the bank, and you realize that even the big companies don't really pay COT. So if you are not learning anything from this session today, I want you to go home to see how you can engage your banker. Can you give me an account, or can you migrate me to an account that is COT free? You are going to save a lot of cost from that. Receivable management. How do we track our receivable? Many of us supply, and after you make the sale, you don't care whenever the money is coming back. Whenever the customer feels like paying, he will pay. Then you are not managing your receivable well, meaning that you are borrowing money to finance that customer. If your receivable arrangement with a customer is 30 days after supply, then there must be a proper tracking system that ensures that payment, the customer is reminded like 5 days before that time to ensure that payment comes in 30 days, or at most maybe a few days after the 30 days. So this is some of the areas where businesses can actually engage, become more financially resilient by planning and managing their finances very well. All right, so let me look at another pillar for financial management. I'm going to stop here, and this one is talking about revenue diversification. This is key, right? In our own country, it's difficult for you to build your business on only one source of income. As business leaders, you must keep thinking, from which other sources can we make money for this business? Can we utilize other multiple sales channels? If you are selling traditionally today, how can you diversify your sales channels? How can you open it up to online retail? How can you join e-commerce site to ensure that more people can patronize your business, your products and services? So that will immediately diversify your revenue. Explore new customer segments. What segments can we still provide these same services to? If you have been focusing on a particular age range, can you tweak your product to also administer services to other age range or category of customers? So this will help us to diversify our revenue. Can we introduce complementary products, services? You are a bakery. I have a friend that runs a bakery, and after some discussion, Oga, what else can you do? And my friend started selling drinks in bulk. Yeah, they are complementary, and today that business is also expanding very well. So guys, we need to think, what complementary products and services can we add to the one we are known for? How can we explore new territories? We don't need to be in Lagos alone. You can actually be in Lagos and be selling in Ibadan, be selling in Osun or Osogbo or somewhere. It's just for you to open your mind and see how you can do some partnership that can expand your territory, where you can sell to more customers. Cross-sell and upsell. All these are areas where businesses can look inward and see how they can diversify their revenue. So we've talked about two. We've talked about financial planning. We've talked about revenue diversification. And I think I will anchor on this. I still have 5 minutes. You need to build strong relationship. See, your business is as strong as your stakeholders. If you have the right people supporting your business, and come rain, come shine, you realize that you are going to stand because you have people backing you up. So the next people you need to build good relationship with are your suppliers. How are you managing them? How are you treating them? My suppliers are my investors. I have a whole lot of them, and I don't joke with them. And see, for the past 6 years, they've been so supportive because we do what we promise we are going to do, despite the challenges in the economy. Even during COVID-19, we kept them very closely to our heart. You need to do that. Don't fight with your supplier. Don't delay their payment. It will not end well for you. Who are your investors? No matter how small your business is, you need investors. You need that one person, that two or three people that can easily run to support you with 1 million, 2 million that you can refund in the next 1 month. You will need them. Build good relationship with people like this. Your customers, of course, I don't need to overemphasize that. Your regulators must be your friend. We are in Nigeria, right? Here in the UK, you cannot be a friend to regulators, not likely. But in Nigeria, yeah, we can do that. And yeah, I'm not saying we should do on the professional things, but we should not be enemies to regulators. And these are the relationships that will help us foster a financially resilient business. You understand? These are relationships that you don't joke with. As you grow in business, you realize that one of the most important tools is the quality of the relationship you are building with your stakeholders. I'm going to stop here, right? So that we don't end late. It's very clear that we're going to have a second session for this topic. And if there are questions that I need to answer, we still have about 4 minutes. I'm very mindful of the time. I think we can do that now.
In this powerful continuation, Mr. Sola Adeyiga dives even deeper into financial resilience by giving practical solutions to face uncertainty with confidence.
For the sake of this presentation today, we'll be looking at only one dimension of the resilience. This financial resilience is a subset of business resilience, and that is the crux of the matter today. So your financial resilience is the ability of your business to withstand and recover from financial shocks while continue to operate and grow. It means that despite this disruption caused by the various adverse situations all over the world, your business should not suffer losses in finance. Meaning that, cash is king. The engine oil that runs a business is liquidity. So immediately you don't have what they call liquid. Immediately your business is starved of liquidity, then you are gone. So your ability of a business to withstand and recover from financial shocks, and you keep running and grow your business after disruption, is called financial resilience. A resilient business can successfully deal with unexpected challenges and find opportunities during periods of disruption. So the idea here is, how can we build financial resilience into our business model? Good. Let us review 4 pillars of financial resilience. Okay, so we started with the first pillar, financial planning and management, and we talked about areas where businesses can actually improve on financial planning, and we mentioned budgeting. And remember I said, if we're in quarter 3, if your business doesn't have a budget for the quarter, then there's a problem. I also mentioned that if you are not measuring it, you cannot monitor it. So if you're not measuring your KPIs, you are not measuring your expected sales volume, you are not measuring your debt management, your cost of fund and co. How can you monitor performance? So you must have a budget for quarter 3. And not only that, are you keeping your books? What is your performance in quarter 3, quarter 2 compared to quarter 1? As a business leader, you must, no matter how small and disorganized it may look, you must be able to identify if you are making profit or otherwise. So talk about debt management. Debt is not bad. It is the way we manage our debt that is bad. You should be able to use your debt judiciously. Borrow for growth. Don't borrow for consumption, right? So if you are able to apply it into your business operations, you realize that you grow with debt. In the field of finance, debt is actually better than equity, because with debt, you can actually grow without sharing control of your business. So debt management is key if you really want to build a financially stable or a financially resilient business. Your profit reserve, the best kind of capital any business can use to run or grow a business, is your profit, it's your reserve. You have joy that this money is from my sweat. So business is, look at the way we started from budgeting to bookkeeping, and now I'm getting to pay reserve. If you don't keep your books, if you don't report in, how do whether you are making profit or not? Profit is different from liquidity, right? Profit is the money you have made from your operation within a period of time, be it quarterly, be it half yearly, be it annual, that you now save that, this business has made 50 million or 100 million this year, and we are saving 70 million for it. You should build profit reserve. It's your best defense in the face of disruption. Your debt, you are paying interest on it. If you have equity, you are paying dividend on it. But if you have profit, it belongs to the business. So profit is actually the money the business makes by itself. So always endeavor to keep profit reserve from your business. It will go a long way in defending you in the face of disruption. Cost management. Remember, I mentioned that there are two ways for businesses to make money. You can increase price or you can reduce cost. So oftentimes we don't have the power to increase price because of competition, but the capacity to reduce our cost lies with us. To look inward and see where you can cut costs. I mentioned as a case study, COT is as small as, it could be 4,000, 5,000. Do you know that you can actually cut it? Talk to your banker. That was the case study we used. And look at other areas where you can remove cost of papers, cost of printing, fuel here and there. Look inward. At times, we always think about thinking outside the box. But may I shock you? Most of the time, the solution is within the box. So at times, think within the box and look at what you are currently doing as cultural that you can actually improve upon. Receivable management. Manage your receivable. Manage your receivable as much as possible. So don't just allow your customers to pay when they remember they are owing you. They must pay when it is due. Before due date, you must have a system that sends an email. If you don't even have it automated, there must be an accountant or a bookkeeper that follows up on receivables. Receivable must be properly aged. 2 days, then 5 days before that time, already sending a mail reminding. These are areas because receivable money that belongs to you. You have already done the job. Receivable are not revenue diversification. Right. Diversify revenue. We said you should not unfortunately don't just focus on revenue. How can you do what customer trust you? What else can you sell to them? They are buying from you because they know your brand. So anything you sell to your customers, and you increase your revenue source. What other channels can you use to sell? If you have been selling traditionally, can you go into some partnership? Can you use digital means to sell your product? All right, so we spoke about building strong relationship. I believe this is the fourth pillar. The first pillar was financial planning. The second pillar was revenue diversification. Now we are on the third pillar, which is building strong relationship. Businesses thrive on relationship. Where you are is a function of the quality of your relationships. Who are your customers? How well are you bonding with them? Aside selling to them, what other offering do you give? Do you give them tips? I have a lady friend that used to sell pay, and I say, hey, you don't just sell parfait, sell healthy living. So what are the other things you can sell to your customer that can endear them to you? Build very strong relationship with customers. Train them, give them information that aside buying from you, they get all these things free of charge. Suppliers, who are your suppliers? How well are you owing them? If you are owing suppliers too long, you are not being smart, you are being stupid, because eventually suppliers will look for other customers and leave you. One area you can get free credit is through supplier credit. In finance, they call it supplier credit, meaning that when your supplier gives you goods for the next 2 weeks, that Oga use it for 2 weeks, pay me after 2 weeks. He's actually giving you credit. And that is the same thing a bank or a lender like me will do. But when I do that, you go through a rigorous process, I charge you for it. Your supplier is not going to charge you for it. So build good relationship with suppliers that will make them trust you to give you supplier credit. It's a way to be financially resilient. Your creditors are like your suppliers. Creditors are guys that invest, that give you money. When your payment is due, please pay as I when due. There's some of my customers that when they ask for money, even without documentation, we are ready to give them. Why? Because we've seen how they apply the credit and how it has grown their business over the years. But unlike others that they collect 1 million, 2 million, it's very small money and they mess up with it. So please don't be that kind of business. Be integrous with creditors. Investors, I mentioned, if you cannot call 1 or 2 people in your network to give you 1 million when you are in financial crisis, then there's a problem. You must build a team or a group of people who trust your business, that whenever you need some investment for short term, medium term, they are ready to trust on you. Regulators, don't fight your regulators. They are not your enemy. In Nigeria, you better be friends with them. Build good relationships that whenever you are in need, there's always someone to help your business. And you have to be intentional and be deliberate with it about this, about building strong relationship. All right, so the last pillar is operational efficiency. Try to streamline your processes, right? Avoid wastages. There are some bureaucracies we have in business, particularly in the big companies. Bureaucracy in itself is not bad, right? But when you are small, you are supposed to be nimble and adaptable. Remove bureaucracy in your process. Streamline the processes. There's always some redundancy in that process that you can remove. Avoid wastages. Do you need to print on every transaction? In my company, 2 years ago, we implemented a workflow system called LAC. And with that, we stopped printing. We used to buy a ream of paper every month. Today, we buy a ream of paper every year. Now, we don't even change our toner. Maybe once in a year, we change our printer toner. And this is how to avoid it. No matter how insignificant that cost is, it's a cost reduction strategy. So I think it's something you can also look back as a takeaway from this class. Let's look at where you can reduce your costs. Adopt technology. Technology, I just mentioned how we are able to reduce waste using technology. Hire right team. If you're a business leader here and you have guys that in your team that are not doing the job, remember, you are going to keep doing the job for them. But somebody must make up for their inefficiency. So hire the right people for you to improve operational efficiency and be financially resilient. Train and retrain your staff on new development, on new technologies, on new operations that can help you to be operationally efficient. So I've run through these 4 pillars. And I believe if you have any question or anything we can discuss after, put in the comments section. So I like my classes to be action based. So it's not about everything I've said online on Google, on ChatGPT to look at them. All right, but let's see what we can take away from this. Are you financially resilient? So just talk to yourself. Are you financially resilient? So I'm going to run through a checklist of about 5 checklists to see how resilient your household or your business is. Number 1, do you have up to 3 months emergency fund? Let's assume another COVID happens and there will be a lockdown. Can you survive in the next 3 months? Can you pay your salary, your staff salary, maybe 50% for the next 3 months? If no, then there could be a problem. Are your finances tracked properly? Remember I mentioned financial reporting. Do you really track your finances as a business? You know how much you made in the month of June? I keep saying this. If you cannot measure it, you cannot monitor it effectively. Do you have more than one revenue source? Yep. So what else can you do? How can you penetrate your customer base? By selling more to them. Do you have a quarterly annual budget? Do you run a budget? What are your expectations? What are the expectations of your business for quarter 3? If you don't even have a finance department, what are your own expectations? What sales do you want to make in quarter 3? But if you don't have financial reporting, if you don't know what you did in quarter 2, how do you project for quarter 3? All right, are you inadequately? Insurance is key. Please ensure you have life insurance, you have HMO, you have some form of insurance that can help you recover from financial shock when they happen. So it's up to you individually. You can mark yes or no to these 5 questions. Okay, what are your action plans? As you are going out of this class, we have about 12 minutes more. This week, can you start keeping your books? After this class, I'll be happy if maybe 10% of us can start keeping our books from today. It's not too late. We are in a new quarter, so it's the best time to do it. You can use Excel. If you don't have a software, you can do that. Prepare a budget for quarter 3. Identify areas you can minimize costs. These are things you can do this week between now and Friday. Now, this month, our action plans. Can you draft a business continuity plan? A business continuity plan is like a document, no matter how structured it is, that says how you are going to recover from disruption when they happen. How will you continue to run operations? Just have something that, okay, this happens, I do this. If this happens, I do this. You can do that this month. Go online and get a template that you can adapt to your business. Streamline operational processes. Where can you reduce wastages? Are there redundant processes in your process flow? Can you look at them today? Remove them. And this we do on a regular basis because we want to build customer experience. At Credit Pro, what we sell is flexibility, turnaround time, and if you look at our processes, anything that is not helping us to achieve that, I'm the number 1 proponent. Hey, drop this. Can we drop this and still achieve our objective? still streamline operation percent of your profit. You can put it in an investment fund. That okay, I made this profit and I'm putting 10% here so that you not even have access to it. If very safe one is treasury bills, it's a no-brainer. Just put some money there as your reserve. Explore new income stream. This quarter, where can you sell more to your customers? Just think about it, and that is how you achieve it, right? That is how you achieve it. Thank you. I believe I'm going to be sharing this, and as much as possible, please take something away as your to-do from this session.